Well, Patrick Reed is co-founder of the Adamis Principle, which is a markets trading consultancy based here in London. Patrick, I've got to start by asking you, confidence is key in the banking sector. So after interventions and buyouts, why are we still seeing this sell-off?
Well, it really is a confidence issue. Now, Credit Suisse and Deutsche Bank have had their fair share of problems, and you can see that specifically in Deutsche Bank from 2016 and also 2018, and you can see that in the reflection of the derivatives market, specifically the credit default swaps, the CDS market. At the moment, it was a spike late on Thursday to 173. That caused a huge sell-off, and the price is never wrong. The price is always right. It's a lack of confidence, and for risk takers, they would rather sell now and ask questions later, because essentially some of the bigger banks that maybe have had their challenges over the years, those are the first and next ones under scrutiny.
As confidence dips, people are beginning to ask how different this is to the 2008 banking crisis. Now, the Dutch Prime Minister, Mark Rutte, says it is different. There's a capital buffers, stress tests, stronger economy in place. We've had an EU leader's statement saying there's strong capital and liquidity positions compared to 2008. Even the Belgian Prime Minister saying there's no immediate threat to the banking system. Do you think investors agree?
Some do, some don't. And of course they're going to say that. But the fact that they are saying that means something else. They have to say that. The key thing is belief. It's the market. Does the market trust what they're saying? Now, yes, of course, this is nowhere near 2008. It's a completely different environment. However, it doesn't make it any less dangerous, because the pebble, no one really knows the name of the pebble that can cause the avalanche. And in a banking crisis, which is basically what we're experiencing, or the very beginnings of one, you don't really ask what the pebble is named. It just nonetheless causes the crisis because of reduced liquidity. The tide is out, and as Warren Buffett says, you better be wearing shorts when it does go out.
I guess with the pebble difficult to define, it's going to be difficult for central banks and governments to know what to do. It doesn't help in America, where they're sending mixed messages on guaranteeing bank deposits, I guess. But what do you think central banks and governments could do to calm this situation?
Sorry, could you repeat the question?
What do you think central banks and governments could do to help calm the situation? Well,
the key problem here is central banks have front-loaded interest rate hikes. And they've been doing that to tackle inflation without any regard for things breaking. Now, many of the central bank heads have said, look, we're going to front load inflation, many to the tune of 75 basis points, until something does break. Well, guess what? Things are broken.
So do you think they were too quick?
That's the problem.
Do you think they were too quick in bringing in those interest rate hikes, the Fed and the Bank of England?
Yes, absolutely. They were too quick and too soon. So too quick and too large, rather. Sorry about that. What I would say is, yes, inflation is political, and yes, the caveat is central banks are independent, but with a lot of political pressure, they have to be seen to be doing something. Now, that's one thing to talk tough, be hawkish, and jawbone, but doing these front loads and doing it too quickly, too big, and continuing to do it has obviously put a lot of these so-called weaker banks and larger banks under a lot of stress, and that is the problem.
All right, trading and currency expert Patrick Reed, thanks so much for sticking with us there on World Business Report.